10 California real estate questions you need to know. Let's get you to pass your real estate exam. Question number 1. Sydney has inherited her grandmother's estate worth approximately $4.5 million. Congrats, Sydney. She is worried about paying taxes on the estate and the inheritance. How will these taxes affect her new estate and inheritance? A. While the federal government sometimes taxes the estate of deceased persons, California has eliminated inheritance taxes altogether. B. California has eliminated all estate and inheritance taxes. Due to the elimination, federal estate taxes do not apply in California. C. Sydney will have to pay the applicable estate and inheritance taxes on her grandmother's estate based on her particular taxable situation. And D. None of the above. So first, let's clap it up. Let's give it up for Sydney. Congratulations. You just got $4.5 million. And the answer is A. California has eliminated inheritance taxes altogether. So Sydney will not pay taxes on the inheritance. Huge come up for Sydney. Congrats, Sydney, again. 4.5 mil. Take care of us, please. Share the wealth. All right. Question number 2. A taxing jurisdiction has a mill rate of 14.7. What is an owner's tax bill if his assessed value is $250,000? A. $36.75. B. $367.50. C. $3,675. D. The tax bill is based on taxable value, not assessed value. The answer is C. Taxes. The mill rate times 0.001 times assessed value. So 14.7 mill rate times 0.001 equals 0.0147 times $250,000. Make sure you know with that mill rate, you just got to do that times 0.001. That's a little tricky one, but just remember that. Question number 3. The sewers in Mary's neighborhood need replacing. In fact, the entire sewage system for her city needs replacing. The city has imposed a tax that will pay for all of the sewer updates in the area. What type of real estate tax applies? A. General tax. B. Special assessment tax. C. Ad valorem. D. Both A and C. The answer is B. Special assessment tax. So these are used to fund projects that will benefit residents in a particular area, or in this case, the entire city. Each resident benefits from the improvement, and they'll be charged a pro rata share of the cost of the project, right? Assessed by like frontage foot. All right, so thank you for studying for your real estate exam with me. If you enjoy these videos that I'm making about test questions, please subscribe to the channel. Back to the questions so we can help you pass your real estate exam. Question number 4. John and Tom purchased a home that only had one previous owner. It's a simple 3-bed, 2-bath ranch. Sounds beautiful. The previous owner built the home in 1964 and recently passed away. How sad. John and Tom had looked at the previous owner's property taxes and found them to be quite manageable. When they received their first assessment, they were shocked. Which proposition is attributed to this dramatic increase in property taxes? A. Prop 60. B. Prop 13. C. Prop 218. D. Prop 90. The answer is B. Under Prop 13, any new owner after March 1st, 1975 will have taxes assessed based on the sales price or the value of the property on the data transfer, resulting in the new owner paying much more real property taxes than the previous owner paid. So I want to actually touch on this. This is more just for general real estate knowledge. When a new homeowner buys their home, they actually get hit with a supplemental tax bill, right? They're going to get hit with a bill a few months after they buy the home. And then on top of that, the property taxes on their property are going to be significantly higher than what the previous owner had to. All right, question number 5. A mill rate is used in real estate. A. Appraisal to determine the market value. B. Finance to determine the points charged on a loan. C. Taxation to determine the owner's tax bill. D. Assessment to determine the jurisdiction's budget. Answer C. Taxation. We kind of went over a math question with this one too, right? Tax rates can be stated in mills. Question number 6. Ken has fallen behind on his property taxes. Oh no, Ken. Sorry to hear it. He has received the intent to sell notice and is terrified of losing his home. Ken lost his job and cannot immediately repay the back taxes. Shoot. Ken's in a tough spot. How can Ken keep from losing his residence? A. Ken has already lost the title to his home by falling behind in his taxes. B. After the intent to sell notice, a 3-year period of redemption begins. Ken can redeem his property from delinquency by paying all back taxes, interest, penalties, and any other applicable fees. C. After the intent to sell notice, a 5-year period of redemption begins. Ken can redeem his property from delinquency by paying all back taxes, interest, penalties, and any other applicable fees. D. After the intent to sell notice, Ken must repay back all back taxes, interest, penalties, and any other applicable fees within 1 year and pay the current taxes on time to avoid losing the title to his home. Answer is C. A notice to intent to sell is a book sale only, wherein the property owner still owns the real estate and has 5 years to redeem the property by paying all back taxes, interest, penalties, and other fees. Ken, I'm sorry to hear that hard times have come upon you, but you're going to make it, buddy. You got 5 years. Get your money right. Get your life together. Get your house back. All right? We believe in you, Ken. Question number 7. The Smiths have decided to move to Antigua. They are transferring the ownership of their $950,000 home in Oakland to their daughter, Renee. Renee has heard about Prop 13. She's a little nervous about not being able to afford the increase in property taxes. Does she need to worry? A. In the state of California, transferring a principal residence of $2 million or less from a parent to a child is considered a transfer exclusion. The property will not be reappraised and the taxes increased. B. When the property is transferred from the Smiths to Renee, the full cash value for tax purposes will be adjusted to the current market value of the property. This will increase the property taxes considerably. C. In the state of California, transferring a principal residence of $1 million or less from a parent to a child is considered a transfer exclusion. The property will not be reappraised, nor the taxes increased. D. None of the above. Wow, Renee. Congratulations. You got a $950,000 home in Oakland. But your parents are moving a little bit far away. So the answer here is C. The transfer exclusion to Prop 13 prevents the reappraisal of a principal residence of $1 million or less that is being transferred between parents and children, resulting in no increase in property taxes on the property. Question number 8. Which of the following is the dollar value of the mill rate 86.5? A. 86.5. B. 0.865. C. 0.0865. D. 8.065. Answer C. 1 mil equals 1/1000th of a dollar, aka 0.001. So if you divide 86.5 over 1,000, you get 0.0865. Or you could also do 86.5 times 0.001, and that will give you 0.0865. We're almost at the finish line here. If you thought these questions were helpful, go ahead and smash that like button. Question number 9. Tim owns a mobile home. He wants to transform it into real property. Transformer style, huh? Okay. He attaches the mobile home to an improved foundation, records a document reflecting that the mobile home has been affixed to an approved foundation system, and obtains a certificate of occupancy. Which step, if any, did Tim leave out? A. Tim forgot to ensure the axles are attached to the frame. B. Tim forgot to obtain a building permit. C. Tim forgot to have the piece of property on which the mobile home is located mapped and recorded. D. Tim fulfilled every prerequisite for transforming his mobile home into real property. The answer here is B. The 4 requirements for transforming a mobile home into real property include obtaining a building permit. It's the very first step. Second step, attaching the home to a foundation, right? And then third step, recording a document that shows that the home was attached to the foundation system. And then last but not least, obtaining a certificate of occupancy. So Tim did all the stuff except for the first step, which was to get an actual building permit to do so. Tim, I love the hustle. I love what you're trying to do here, but we got to make sure we follow the rules, right? We got to make sure we do things in the right way. Question number 10. Luis recently turned 65, retired, and is downsizing to a smaller home. She was concerned about moving from the home she owned for 40 years with its low assessment to a smaller home, but with a much larger assessment. This is a legitimate fear. This is a real fear. Which proposition eases her worries? A. Prop 60 allows homeowners 55 years and older to transfer their base year property tax value to another home of equal or lesser value. B. Prop 60 allows homeowners 65 years and older to transfer their base year tax value to another home of equal or lesser value. C. Prop 90 allows homeowners 55 years and older to transfer their base year property tax value to another home of equal or lesser value. D. Prop 60 allows homeowners 55 years and older to transfer their base tax value to another home of lesser value. The answer is A. Under Prop 60, homeowners 55 and older can transfer their base year property tax value to another home of equal or lesser value in the same county and maintain the lower assessment from their former home. Well, that's all, folks. I'm really happy that you decided to study for your real estate exam with me and these questions. If you have any questions, I'm dropping my email right here for you. I'm a resource for you. I truly hope you pass your real estate exam. And when you do, let me know by emailing me or leaving a comment. Good luck with your studying. Good luck with your test.